Hello, I'm Adam from MarketLifeTrading.com and welcome to the free video. So as we get started here, if you would, please go down and hit like, subscribe to the YouTube channel. We're going to try to put these videos out pretty much every day. We may miss a day or two here and there. And what we're going to do is do a combination of telling you about a trade that we actually did, which is problematic today because we didn't do anything, but we'll talk about that too, and then also give you a little bit of an idea about the broad market. So let's jump in. I mentioned Roku yesterday. So we had this position in Roku, and we were fortunate to be in a stock that caught an upgrade. Now, given the overall environment of the market, we came in today loaded up pretty long with no shorts, and I didn't really think that it was a time that we wanted to be putting on more risk. And some of the longs we had on weren't really moving, so there wasn't a lot to do. But what I want you to think about is how you manage a trade like this. And the key to managing a trade is being able to manage it in pieces. You know, this is one of the problems that, like back in the day before these E-mini micros for you short-term traders, back in the day when you had to trade E-minis, when somebody started trading, usually you would trade one. And that's really hard because that means, think about it, your position is either I'm fully long, fully short, or I'm flat. You have no nuance, no other option. And it's much, much easier when you have multiple pieces and you can piece out. So what do you do with something like this? I think it's very simple. When you have the opening gap, what you want to do, if you can watch the thing intraday, you want to watch for a gap failure. Now, if we go down to, let's see, if we go down to like a 5-minute chart, we were watching this in real time, but I think you can see there was really, so we opened here, a little bit of movement around the open. Now, you might say, wait a minute, Adam, a little bit of movement. So what are we talking about? Like we opened 97 and change, and traded down, I mean, let's just call it a point, right? It traded down roughly a point. Is that a little bit of movement on a $100 stock? Given the gap opening and the type of volatility you'd expect, yeah, it is. And also the fact that there was really no momentum below the open. And keep in mind, this is a 5-minute bar, so we're higher and we never come back. So, you know, we never come back to that low of the day. So it's very easy to see that you could have had a different situation, right? You could have gapped up and then sold off all day. Certainly possible. And the only way to know what's happening here is to watch on the open. And then as soon as this opening range is established, and I don't use that in any formal sense, but you know, for me, it was once we have gone down to touch the low, you just put an alert there. And it really is that simple that until you come back to that alert level, you don't really have a problem. Now, from a practical standpoint, we had a full-size position in this stock, and it was certainly a position that could hurt us if it fails. Let's say the market fails tomorrow. I don't think it will, and we'll talk about that in a minute. But I don't want to hold my full position for a gap down to 80, which is, you know, I mean, it's not outside the realm of possibility. I don't think it's likely at all, but it's possible. So what you do is you take off some of your position. How much? Well, it's part of your trading plan, so you have to know in advance. Maybe you take off a third, maybe you take off half, but I think you want it to be meaningful. You don't want to take off a tenth of your trade or something like that. You want to take off some real position here, so you kind of anchor your P&L here. And then in the absolute worst case scenario, which by the way, you trade long enough, it's going to happen. You're going to have that worst case outcome. But in the worst case scenario, you don't get hurt very much. And maybe even in some worst case scenarios, you actually end up with a small profit. So that is Roku. Now let's talk a little bit about the broad market. I think we're headed higher. And I mentioned yesterday that there were really two scenarios that we need to look for. And let me get a clear page here. And one is, so we came down and we made a test and we snapped up. So what happens? Do we roll over and sell off? Well, that didn't happen. So that scenario is not in play. Do we snap back really quickly, which could put us at all-time highs before anybody could even blink? I mean, like, next week's not out of the question. We're not that far away. This is possible. This could be happening. The other possibility would be to kind of stabilize here and make a bear flag and sell off. So what we need to do is just to watch this momentum develop. These two strong bars are, and you might say, well, that's not really strong, right? If you're looking for an excuse to be short, if you want to hate on the market, you can find a reason here, right? Like, I mean, I can make stuff up. I can tell you, oh, we didn't take out this resistance level. Oh, it stopped at the moving average. Oh, it's smaller range. Well, you know, not really, because what we had here was a really big snapback bar, and then we continued higher. So we might stabilize here as long as we kind of stabilize and hold in this area. I think overall it's probably bullish to potentially strongly bullish. So I want to be careful with the shorts, and we're looking now like we're probably headed higher. Okay, that's all we have. Check back every day. We'll have a video for you. Subscribe to the channel, like the video, and if you want to check out more of my work, you can check out marketlifetrading.com. Thank you very much.